Right. Yeah. So let's begin. So we're talking about Padenga, which is a company that in the last couple of years had to pivot from being a sole, well, maybe not sole, but crocodile breeding, and then the selling of mainly the skins to the top end of the world markets, the luxurious world market, and to a lesser extent, they were also selling their meat, crocodile meat. And at some point, they wanted to diversify from their Zimbabwe operations, and they acquired an alligator producing company in Texas, I think, in the United States. And the alligator skins is slightly different from the now crocodile skins that we have here, which you can do handbags and the like. I think for the alligator ones, they could do belts and belts for wristbands for watches. And I think it didn't work out quite well. There were so many issues with that one. I'm not sure if they still have it, that operations in the United States. And then on the crocodile skin business, I saw over the years when I was still an analyst, you could see that the growth, there wasn't much growth on that front, and they were also limited in terms of the market that they supplied. I think they had just a few buyers of their crocodile skins. And now, fast forward a few years later, they have since diversified into gold production, and it seems by the numbers, just the nominal numbers, the contribution that is coming from gold is significantly higher than the contribution is coming from crocodile skin business. Now, you recently penned an article, which I saw on your LinkedIn profile, and for those who don't know, Rufaro Ojeri, who is my guest today, is an avid writer, and he writes quite a lot also on his LinkedIn profile. So if you want to read about what's happening in the Zimbabwean economy and the corporate world, I think you need to, is it following on LinkedIn or you connect
you connect.
So you need to go to that page, Rufaro Ojeri, who is an analyst and currently on study somewhere in the world. And so back to the issue, Rufaro, you recently penned an article on the developments at Padenga, and you mentioned it would be interesting to understand the thought process behind the acquisition of the mining entity Dallaglio, given the context of the pandemic. Do you believe Padenga was primarily driven by risk mitigation, which is obviously hedging against the decline in the luxury goods, or also by the potential for significant growth in the gold sector?
Thanks. So if you look at just before COVID, that's where Padenga made the decision to enter into the gold production business. Like you rightfully mentioned before, they had been primarily a crocodile skin manufacturer, and they were noticing that they were reaching in terms of what they could do from that perspective, and there was a concentration risk, so they needed to diversify. So sometime in mid 2019, just before the pandemic, they issued out a statement that they had reached a decision to venture into the gold mining. So obviously this was to try and diversify from a business that was reaching its maturity. But the question that can come from there is that, was gold the only way that they could diversify? And no, not necessarily. There are other businesses that they could have gone into to diversify. I mean, like I mentioned earlier in the article, that crocodile skins are more luxurious. We call them consumer discretionary products. They tend to do well when the economy is pumping and there are more disposable incomes. And subsequently they do well when there is a downturn in the economy. So to diversify well, you need something that do well when the economy is on its downturn, so that you have that sort of like perfect diversification. And I was thinking they could have gone into retail, because retail, consumer goods retail is one of the other industries that could have diversified. But for them to pick gold specifically, I'm sure they were seeing something in gold. And the other thing was that they also wanted to diversify into something that brings in foreign currency, because they wanted those exports. So I think the fact that you need something that diversify a consumer discretionary and something that is an export probably limited their universe to mining, gold mining specifically. Yeah, but it would be interesting if the way it worked out well. It would be really interesting to know that what was like the investment universe initially that they had, and how did they cancel all the other opportunities to say, no, this doesn't necessarily fit what we want to do, until they ended up in the gold mining, because it subsequently then worked out very well. Yeah. So
Yeah.
in a nutshell, it was a combination. In a nutshell, it was a combination of both: the need to diversify and the attraction in the gold because of its exports.
Yeah, so on that aspect of diversification and them going into gold, I think when they went into gold, I think the price of gold was less than 2,000. I think 1,500 thereabout. Now it's at 2,800, 2,700, somewhere thereabout. It's obviously bullish at the moment. Do you think it's something that they could have foreseen, or it's just sheer luck?
Yeah. So this is what I think. This is an opinion. I don't think it's something that they could have seen. And I was going through the cautionary statement that they issued out as they were planning on buying Dallaglio. It wasn't more of an economic outlook that they were seeing in the gold industry. Say we project that the gold industry is going to be bullish over the next 5 years or something like that. But it was just the understanding that gold is exported, so we need exports, and we see that there is potential. So definitely they knew that the mines are being underutilized, and if they can put in some injections, capital injections here and there, they can bring the production back to the former yesteryear numbers. So from that perspective, pricing, I think it was sheer luck, but at the end it worked in their favor.
And just looking at at Padenga, obviously the crocodile business, it was an export business. And that organizational structure that they had, understanding the export market, the world market, do you think it's something then that helped them in terms of preparing them, entering into the mining sector, obviously, which is largely also an export market? What challenges might they have faced in integrating completely different types of business? Crocodile business is agro, and then you are going into mining, which is totally different. However, they are both export businesses. Do you think that could have helped them?
So these are completely different businesses, and the expertise required are different. Of course, like you rightly mentioned, they are both exports, but there are some technicalities and nuances that are in the mining businesses that you don't necessarily expect somebody whose expertise are in the crocodile business would naturally possess. So hiring new management was critical in ensuring that the mining business operates well. So it was going to be a big risk, in the sense that you have management that has expertise in this part of business. So, for example, if you look at the 2019 results, the crocodile business was contributing about 90% thereabout towards revenue. And right now it's now contributing about 10 to 12% towards revenue. So you have this management that has mastered this one type of business, which over the next 6 years is going to become a minority in terms of revenue contribution. So that switch was going to be a very big risk, and they seem to have managed that well. But I don't think it was naturally because the management that was under the agro business, like you classified it, naturally possessed skills that would fit into the mining business.
Okay, but I want to touch on Padenga is listed on the Victoria Falls Stock Exchange, and prior to its listing on the Victoria Falls Stock Exchange, and also prior to the acquisition of Dallaglio, it's a counter that I loved, a counter that I have bought shares in, and there hasn't been movement over the years, no movement in the shares in terms of the valuation. I sell the shares, I see the counter. This is a good counter. It pays dividends. It sells into the export market. But again, in terms of the price on the VFX, it hasn't been of much joy. What do you think is affecting or hampering price discovery on the Victoria Falls Stock Exchange?
So this is what I've realized. So much of the activity that happens on the Zimbabwe Stock Exchange is driven by the fact that you need to hedge against inflation in your local currency. So if you receive local currency today, the fear is that it's going to lose value because of inflation, and that pushes the activity that you see on the Zimbabwe Stock Exchange. If you receive US dollars, the thinking, the mindset mostly is that you are already hedged against inflation. So a long position in USD already means you are hedged. So it means your appetite to get on the stock market to hedge yourself drastically reduces, which is why you see that the activity on the Victoria Falls Stock Exchange is way less than on the Zimbabwe Stock Exchange, rather is less than on the Victoria Falls Stock Exchange, and this is what limits price. So you see that there is a upside potential for a counter, and I don't think it's specific to Padenga, to be quite fair, or the counters that are on the VFX. Simbisa used to trade a lot when it was on the ZSE. When it moved, the story is the same. So I think it's coming from a mindset where the activity is driven by the need to hedge against inflation. So you now need to think twice before you put bets on counters that are on the VFX, because you consider yourself already hedged by the fact that you have US dollars. So I think that limits the activity that happens on the Victoria Falls Stock Exchange, and that also limits price discovery. This other day we were talking about somewhat sister company, which is National Foods, and it offered minorities a price which was higher than the trading price.
It's a premium.
Yeah, at a premium, but it didn't move on the exchange. It remained like that. So these are some of the things that happen. For someone to take their US dollars to go and deploy them on the market, I think they consider it a significant risk compared to the local currency. So I think that's what's significantly hampering the price discovery for most of the counters that are on the VFX.
Yeah, that's an interesting view there, Rufaro, to say most investors are probably investing to hedge against currency volatility, especially when it comes to the ZiG, and which is not something that you can associate with the US dollar. But what needs to be done, because stock markets are not only about hedging. So let's come back to Padenga. Now they've got the gold division as well as the crocodile business. Do you think, from a strategic point of view, it's worth to keep both the businesses, keep running both businesses? Are there any synergies that they can explore, or maybe eventually they should let go of the crocodile business, or maybe whatever they are getting from the crocodile business is, even though it's now a smaller contribution to the overall performance, it's still worthwhile?
Yeah. So I think we need to get the original reason why they ventured into gold. Their motivation was to diversify. They didn't want concentration in a single business. So the moment you remove crocodile operations and you go full scale on gold, then you reintroduce the risk that you ran away from, despite the fact that it has just shifted. Now the concentration is in gold. Previously, it was in crocodile skin. And I can see an argument that says would rather have a concentration in gold as compared to a concentration in crocodile skin, because of crocodile skins, a luxurious product. Once you have a few bumps in the economy, it hits the most. But I believe that the perfect situation would be where the revenues and the profits from gold are not that significant, 90 to 10% as it is right now. I would envisage a scenario where it decreases maybe to 60-40. The gold operations maybe 60%, other operations, the agro, as they classify it, 40%, so that there is no concentration risk on the gold. In terms of maybe you can't scale in the crocodile skin business to such a position where they can contribute 40% towards revenue. So maybe they need to look for something in the agro space to get into, so that this concentration risk on gold is reduced. Because the moment they keep it in 90% levels where they are right now, they will have to go back to the drawing board and will have to face the same risks that they faced 6 years ago when they decided to diversify. So I think, in as much as the gold business is doing good right now, and the problem is, like you said earlier on, when they got in, the prices were around 1,500, 1,600 thereabout. Right now we're playing around 2.6 to 2.8 per troy ounce. So if there is going to be any mean revision in the prices of gold, it's going to significantly hamper them, which is why I feel like diversification is very important, so that one division of the business doesn't need to be that much concentrated.
Yeah. Thank you, Rufaro. Thank you for taking your time to be with us this afternoon. And you have got a busy schedule, but we appreciate that the time that you have taken to be with us to talk about one of the fledgling Zimbabwean companies, that's Padenga.